Hey guys, this is Doc Huffpower coming to you from my studio here in Alvin, Texas. Thank you for joining us for the Dear Doc podcast. We've got a really cool guest for you today. He's actually a personal friend of mine. We've spoken a lot of times about how we can help dentists to keep more of their money that they work so hard for. Now, Jay, I'm going to give you a little overview real quick, just so that people know who you are. So Jay Malik is a dental speaker. He's actually spoken at a couple of my conferences. He's a practicing accountant, a tax strategist, and a money coach. You know, a lot of people hire a CPA. Jay's actually an EA, which is a federal registration rather than a state registration. I think that's kind of a special thing for him, and it kind of sets him apart from the normal guy you might get to do your taxes for you. Mainly because Jay isn't just a tax preparer; he's a tax strategist. He's going to work with you to help you find every single legal way for you to not pay taxes. Remember, tax evasion is a crime, but tax avoidance is your duty as a citizen to the United States. Hey folks, welcome to the Dear Doc podcast, where we discuss the practical aspects of running your dental practice, as well as the technology, softwares, and services that can help to empower you as a dentist. I'm your host, Doc Huffpower. Thanks for joining us for today's episode. Before we get into today's program, I'd like to talk to you a little bit about one of our sponsors, DocSites. DocSites provides affordable and effective websites for dentists with no long-term contracts, transparent pricing, and great customer service starting at only $59 per month. They also provide optional online marketing packages to help you increase your online visibility. For special offers, including up to 25% off of your website setup, text podcast to 818-489-9823. Again, that's 818-489-9823. Now, this is a limited time offer, so text now and lock in your savings. Or you can visit docsites.com/TBOD for more information. Jay, how the hell are you today?
I'm doing wonderful, my friend. Doing great and happy. And good to see you again after a few months.
Same here. Well, we're going to see you again in January, I believe. We're having another continuing education event here in Houston for all our wonderful fans and followers of the group. And I'm really excited to hear what kind of new strategies you've got for this year. I know you always bring us something interesting and new. I try to keep up, but you always surprise me with something I didn't know about.
Yes. Well, the tax law keeps changing. So every time the Congress meets, one of the secret provisions in every law they pass is it's called Accountants Full Employability Act. They changed the tax law so the accountants can keep
absolutely. I mean, if they made it simple, there would be no reason for accountants, right? So Jay, talk to me a little bit about what you do. Now, your company is called Less Tax for Dentists, which I just love I love the name of your company. It really kind of speaks to what you do. Talk to us a little bit about how you got involved in all of the things you do. I mean, you speak and you teach people, and you act as an accountant and you act as a tax strategist. How did you get involved in all this?
So I have always been involved with numbers and taxes and bookkeeping and things like that, and small business. Since I was a teenager, I did that. I actually, by working as such, I had paid for my college. So then I kept doing similar things, and at some point I realized that the kind of work I do, I help doctors the most. So I started working with doctors, all types of doctors, MDs, dentists, chiropractors, all types. So that worked for some time. As I grew older, I realized that my MD clients, especially the surgeon ones, they kind of had a God complex. Let's put it that way. And it was not as easy to work with them. So I started working only with dentists and chiropractors. Plus, about 13, 14 years ago, Affordable Care Act was passed. And that resulted in the medical MD practices. Most of them have been bought over by bigger groups or by hospitals. So they don't need accountants, individual accountants anymore. They have in-house accountants. So, but I still have my dentist, and after some time, I don't market to practice anymore. So dentists are the only one for the last maybe a couple of decades I've been working with.
So basically, guys, Jay works with dentists instead of all the other types of doctors because we're way cooler. So I know that there's some specific questions that I told you I was going to ask, and one of them is, what is the secret to paying less taxes? And I know that is a loaded question, and I know we're going to break it down further. But if you could just pare it down for us into a very simple, easy to remember chunk of information, and what's the secret to getting to paying less taxes?
The secret to paying less taxes. The one key thing is that the taxpayer, the dentist in this case, needs to believe that you can arrange your affairs or rearrange your affairs in such a way that you pay less tax. It's perfectly all right, and you can do that. In order to do that, you need a plan upfront. So you need to know upfront what strategies are you going to follow and how are you going to follow it during the year. Once the year is over, for example, this year now, 2023, the year is over. So if on April 5th, you take all your shoebox to your accountant and say, hey, do my tax return and save me a lot of money, there is not much they can do by that time. So
right.
It's important that to plan upfront and then implement that plan the whole year round, so you know whatever you are doing, how much tax will you save by the end of the year.
Absolutely. I always tell people, whenever you're preparing your taxes, really you should meet at least biannually, if not quarterly, with your tax advisor, with your financial planner, and with your tax lawyer, or a lawyer who at least has some idea of legalities in tax. That's what I do. It's, it's always done very, very well for my wife and I, because we've got, all of this information. Because sometimes, the CPA will say, oh, well, we're going to do this, because CPAs are very risk adverse. They don't like to push the line too much, because it means they're going to have to defend what they did. They want it to be easy, because they're just preparing your taxes. So they're not going to bring up a lot of things that a tax planner like Jay is going to bring up, Augusta rule, or conservation easements, or R&D, R&D credits, or even taking your building and doing an engineering study of it to cut your building up into individual pieces that each depreciate at a different rate. There's a lot of things that you can do that your regular CPA, definitely not H&R Block, because those guys aren't even CPAs. Those are just schmucks off the street that they take a small class and they prepare your taxes. So you really, honestly, in my book, once you start earning over $100,000 a year, you're a fool not to get a real tax planner and a financial planner involved. There's just so much money that you're leaving on the table. So what are the top 3 things? I like top 3 and type 5 lists. So what are the top 3 things that dentists should be doing to pay less taxes? What's causing them to pay more, I should say? What are they messing up?
Well, one of the top 3 we have already discussed is that having a tax plan upfront and following it. The most important thing which I notice, which dentists for some reason don't do, but they should be doing, is getting a second opinion on their tax returns. You see, when a dentist presents a big treatment plan to a patient, what happens? They normally say, okay, I'm going to go back and talk to my wife, talk to my girlfriend, talk to my dog, my cat, my ex-boyfriend, whoever, right? So they say that. But in fact, what they do is after they leave the office, they call the other next dentist's office and set up a time. and goes, "Yeah, this guy is saying this. Do I actually need a root canal, or can I just get away with just, a filling?" Right? So the other guy gives their opinion. So that's the second opinion. No, for some reason, dentists don't want to do this with their tax returns. I mean, tax, by the way, is the single largest expense for a dentist. Most practice owners
not payroll,
believe most practice owners believe that the employees, the team expenses are the largest expense in their practice.
Mm-hmm.
In fact, it is not. It's a tax. So to take care of this biggest expense, they need to have a second opinion. In my practice, and wherever I go speak, I offer this. We do this all the time, where I offer to anybody, any dentist who wants to, send in your tax returns. I'll analyze it for free, and I'll give you my opinion about that. It's just a second opinion. You get it for free, and then you can do with it whatever you want.
Can we make that offer to anyone who's listening to this podcast right now?
Yes, sure.
Fantastic. So guys, what we're going to do, listen until the end, and then I'm going to have Jay tell you exactly where you can contact him so you can get a free second opinion on your taxes. And I'll tell you what, I'm 95% sure he'll be able to find some way of saving you more money. All right, cool.
Okay.
So you were saying, my friend?
So, Doc, it's interesting you brought this 95% statistics. Let me share with you a small thing about this 95% statistic. I've been doing this, as you can see, after all this gray hair. I'll be turning 60 in a few months. So I've been doing it for decades. And I do, a lot of people, I go to speak at dental events and, all these, all over the country. And I tell everybody wherever I go, hey, send your tax return, I'll do it for free. I'll give you 2 hours of my free time, 2 meetings, an hour each, in which I will explain to you what I found, where you could have done things differently. The result is we get a bunch of tax returns constantly, keep getting throughout the years, prepared by other accountants. And I keep pretty good statistics here of those. And here's the 95% statistic, which I have found. 95% of those have overpaid tax in some category.
Yeah. Well, it doesn't surprise me.
So if in a room there are 20 dentists sitting, only one of them has paid accurate amount of tax. The rest 19, they have overpaid. So and this overpayment is tens of thousands of dollars. That's why it is important to get the second opinion on this tax return. That is the second important thing. The third important thing, and I'm going to just enumerate them and then we can talk about them in detail, is doing the bookkeeping right, setting the bookkeeping right and setting it up and doing it right correctly. The third most effective and important tax saving strategy is using your home and your family in your practice to get tax deductions.
Hey guys, this is Doc Huffpower, founder of the Business of Dentistry and host of the Dear Doc podcast. Today, I'd like to talk to you a little bit about one of our sponsors. 4G Dental Labs has been a sponsor of the Business of Dentistry for over 2 years now. They're a family-owned business located here in Houston, Texas. They're fast, they're reliable, but best of all, they provide affordable quality. They're just plain, honest, good people. For our TBOD members, for your first 20 crowns, every 5th one will be free. Contact 4G Dental Labs at 833-682-8901. Again, that's 833-682-8901. Or you can mail or even just stop by. Jeff Guidey, the owner, would be glad to see you. Absolutely. You say using your home. The first thing that pops to mind for me, because it's something I use every year, is Augusta. But I know there are other things that you can be doing aside. You can hire your spouse and your children, hopefully your children, definitely, because then, that's tax-free income. But talk to me a little bit more about what areas in their home they could be using or how they could be using their home and their family that we haven't mentioned. And please go ahead and explain a little bit more about the Augusta rule and about the child employment in a child employment tax situation.
Sure. Well, the home can be used. Augusta is one way, as you are saying, and The home can be used. The requirement is that you use any area of your home which you use regularly and exclusively for business. You can take a deduction for it. That's one way to do that.
My deduction's right here.
Yeah, exactly. So that is, or you can get it reimbursed for those expenses by your practice.
Right.
We find generally getting reimbursed from the practice is a better way. It gets you better numbers. So that's one way. The second very effective way, which you described, is the so-called Augusta Rule, Section 280A.
Right.
What it is that it basically was not meant for dentists, but it can be very easily molded towards them. What it says is that if you rent the home in which you live to anybody for any reason, for less than 14 days in a year, 14 days or less, then you don't have to report that income on your tax return, when you also cannot get of course, any deduction against that. That provides a very unique opportunity to doctors. So when I bring this to doctors, some doctors love it. They want to do it. They do it like you. And there are others who say, no, I don't want to do it for various reasons. But that is their choice.
No, I would like to pay more taxes than I'm legally required to, because I'm just a great citizen.
Yeah, exactly. So the way that works is that you can, your monthly meeting with the staff, instead of holding it at a hotel, you can hold it in your home.
Christmas party, New Year's party,
quarterly meetings, trainings, all this stuff. As long as it is 14 days or less, you are good. Now, the method to do that is that you go to the local nice hotel and ask them, hey, if I rent a room from you for 1 day for a meeting, how much will you charge them? There's a very good chance that they will quote you something in most areas in the country, pretty north of $2,000 a day.
Right.
Okay.
Well, and the other thing you have to remember if you do that is when you say, hey, I want to rent this room from you, you find out what your minimum catering fee is, because you're gonna be eating at your house, right? What amenities that hotel or that conference center has. If you have them at your house, you have to include that. So if you have a swimming pool, you get a swimming pool at the conference center. Let's say you ask them, hey, look, I want my employees to have exclusive use of this swimming pool during the meeting. How much would that cost me? That's your cost, people. Just, you got to think. If you don't think, you're never going to maximize this tax benefit. I know a good deal about this one because I use it every year. I used to use the conservation easement, but we'll talk a little bit about why that's not a great idea anymore. So, this is one of the reasons, guys, you have to forgive me. I always enjoy talking to Jay because he really gets me to thinking about how to use these tax strategies to their absolute best use case. So, if a dentist wants to pay the least tax, well, actually, you know what? I have one more question. You mentioned something earlier, and I want to remind myself to ask about it. You said 95% chance any dentist that you talk to in any conference that you go to is paying too much in one of the tax categories. Let's go over the tax categories really quickly, because that intrigued me, because I started trying to list things in my head, like, your workers, your employment taxes that you pay and things like that, and your income tax. And talk to me a little bit about that, because that's a concept I haven't really thought about, is tax categories.
Yes.
So let's talk about that.
Well, one of the major areas where significant tax savings can be had is the retirement accounts.
Okay.
If the retirement account is set up right, the doctor can put significant amount of money away for their and their spouses and their family's retirement, and really benefit by the tax savings. Now, of course, it has to be set up right, the right kind, and depends on the doctor's income, and it also depends on how much cash flow they have. So that is one category where we see doctors not, because there is a fear now among dentists. When they talk to me, they express it, but then I have to pay for employees. Okay. Well, of course, the law covers employees, but the thing is, you can set up such a way that you can save significant amount of much more in tax than you are paying to your employees. And this can be, the people who are work with us, I every year show them. This year, if you do, for example, if you do profit sharing this year, you will have to put out X amount of dollars, and out of that X, Y will go to the employees. And if you take that Y out of the X, Z is the amount net tax savings which you are getting. Now you make a choice if that money is worth it for you or not. Of course, the employees will be happy.
Well, and you bring up a really great point. You bring up a really great point there. Guys, a lot of these things, you hear a carte blanche statement of you should be using X. And that's just not how things work, because not only do the tax laws change every single year, but your income changes and the tax brackets change. And so you need somebody who's staying on top of all this stuff and can look at your specific situation and say, okay, because of your specific situation, the tax law says this, here is your income. If we can lower your income to this threshold by doing these things, then you're going to pay substantially less taxes on the remainder that you have. Or if we can put your money into this tax savings account like this, a lot of it really comes down to whether you're just using some tax avoidance mechanism or reinvestment mechanism, or if you're using different things like charity contributions or what have you, above the line type deductions that are going to lower your income and just lower your taxability, your overall tax liability. But it becomes a very complex picture that you really need a professional to help you with. And I will be so bold as to say, any tax professional who you've employed who doesn't teach you, and that's one of the things I love about Jay. He can't stand to have his clients ignorant. He will teach you because the more you know, he respects the fact that you've got a really good brain. And if you say something, this has happened with us once or twice. I say something like, that's a good point, but you haven't thought about this. If you know those strategies, you're going to be thinking constantly about this, and that's going to change your behavior throughout the year. And it's going to make this guy's job a hell of a lot easier because you're going to do the things that you're supposed to do. And he's not going to have to tell you, hey, you forgot this year. It cost you this much money. What are your thoughts on that, Jay? Am I blowing smoke out of my rear end on that one? Or
you are exactly right. There are, Doc, you and I have spoken about this before. There are two types of tax dollars in the country. In the world, there are two types of dollars. So I have like these dollars sitting in my pocket. They all look the same, but they're different. These particular ones which I took out of my pocket, these are post-tax dollars. So my company already paid tax on it. I personally paid tax on it. They went into my personal account and I took it out of there. These are post-tax. Then there's the pre-tax dollars. The pre-tax dollars are which are sitting in my practice account on which tax has not been paid yet. So one key thing is to see how the expenses which you have to make anyway, how can you legally make those expenses with the pre-tax dollars so you can, most dentists I can share with you are in about state and dentists who do well, I must say. They are between 32, 33, 35% state and federal combined effective rate, not the tax bracket, but the effective rate which they pay. So they are at that. So think about it. If they spend $1 from their own money, post-tax dollars, they have to make $1.35 to spend that dollar. But if they find a way to pay it from the practice, for dollar, they only have to make $1.
And I'm going to argue with you slightly there, but I'm taking a different route. I would argue that it's higher than that because a lot of people don't account for the taxes they're paying for their employees. Every dollar I pay for my employees, I'm paying another 25 to 33 cents for every single one of them that I've hired. And so really, that's probably going to add another 5% or 7% on your, well, maybe not 7, because you really should be below that, but it's going to add probably another couple percentage points at the very least to the total taxes that you're paying out to the federal and state governments. It's just something people don't even think about, because it's one of those things that we like to talk about being a cost of doing business, but the cost of doing business are only the ones that you're legally obligated to do. A lot of times we make choices because we're lazy or not knowledgeable.
So just like there are two types of dollars, there are two types of tax systems in the US. You know, the federal tax code.
Did you like that layup for you?
Yeah.
Did you like that layup?
Yeah. So what I was saying was that just like there are two types of dollars, there are two types of tax systems. The books, the tax code itself and the guidance on it from the government, it's about 72,000 plus pages these days. Okay. So, and the most people believe that 72,000 plus pages will lead to one tax system. One everybody has the same. Constitution says everybody is equal, so people will have the same tax system. The tax system was, in fact, the tax system is not one. We have two tax systems in the U.S. One tax system is for people who know, and the second is for people who do not know.
Yeah, absolutely.
Those who do not know, they inevitably end up paying more than those who know.
I could not disagree. One of the things that has always occupied my mind as I think about these matters, because I like keeping as much of I'm a very libertarian guy, so you guys don't get mad at me, but I like keeping every single dollar that I earn that I legally can. And that's one of the reasons I like Jay so much, because he believes the same thing. One of the equations that always runs through my mind is taxes paid today versus taxes paid tomorrow versus inflation, which causes deflationary movement in my money. And let me give you an example, Jay, and I want you to run with this if you don't mind and talk to us about a couple of different scenarios and things that can happen. So let's say you've got a tax event that occurs. You sell your practice or you sell another of your businesses like me. And you say, okay, well, look, and this is pretty complex, guys. So I'm going to go over it slow, and then Jay can show me where the error of my ways or where I'm right, so you can look into this, because it's something he can help you set up. So you sell this business and you say, okay, look, I sold my practice for $2 million. Okay. Now that's what's called a taxable event. That means you owe some money. But what if you sell your practice through a trust, and the trust gathers the money from the practice sale? Well, then you didn't make any money. There's no taxable event. Now, what if that trust loans you money equal to the amount of the sale, because the trust didn't get taxed either, because no taxable event occurred? And then what if you take out an insurance policy and you say, I want to make sure this insurance policy is going to account for inflation and increase in taxes. And I want to make sure that when it cashes out, like a whole life, not term life, guys, a whole life policy, when it cashes out, I want it to pay the taxes that I would have owed on this money. And then I want to repay the loan that I've just gotten from this business. So you end up with a net wash where you actually earn and keep the same amount, kind of, because you actually have to worry about paying a lawyer to set this up, paying a CPA or an EA, I would say, actually, to set this up, and also paying for the insurance policy's premiums. But in the end, you're left with all of your money now, and you pay it in deflated dollars later at today's taxes, I believe. So correct me where I'm wrong there.
Well, when you sell a practice, for example, that's easier to understand. You basically, most of the, not all, but most of the tax that will be due on you will be the capital gains tax.
Right.
And you're right. There are various ways to not pay, to defer paying the tax. There, one of the structures which you have described that is used by a lot of people, and there are other structures as well to meet every doctor's needs. Okay.
Right.
Because people are different. Some doctors who are retiring, they want to say, I want to contribute significant amount to charity. So their
Right.
charity component comes in. You can have a different type of trust and a different type of flows through that. Some people want to buy property, and so there are all these different methods are available to do that. Generally, the challenge which happens, I'll also share with you. Most doctors, when they get an offer for the sale of their practice, they are so excited with the number. They want to close it right away. They want to sign the agreement.
They never think about the tax
agreement. I'll worry about once the money is in my bank account, then I will worry about it. I will want the money and then I will worry about tax. Well, that doesn't work that way. Once if you have received the fund, the sale has closed and everything, then you owe tax on it, basically. So all this needs to be done upfront before, and many times even before the sale agreement is signed. Ideally, even before the letter of intent is signed.
So, two of the things that you mentioned there, my apologies. I'm writing notes. I always write notes when I talk.
No problem. Take your time.
So, one of the things that you mentioned there, you mentioned real estate. So I know one of the things that you can be considering is, let's say, guys, you sell your practice. And guys, please, if you sell your practice, contact Jay or someone like him who can help you to arrange one of these mechanisms. It kills me to see someone work so hard and pay, let's say you pay 15% more. You sold your practice for $2 million. You're paying $300,000 of your blood, sweat, and tears that you have earned out over the years for no good reason. It's just like you're giving someone a gift. You don't even get any tax benefit off of it. So if you've got real estate involved in your practice, you can do a 1031 or a qualified opportunity zone investment, and you're going to defray some of those costs in your taxes. You're going to be able to reduce your tax burden by doing that. And, your capital gains are going to be taxed at what, 20 to 22%? Maxed out, I believe.
That depends. Max goes up to 20, but it starts at 15. For most people, It stays in the 15%, except in the year of sale, because the income sometimes goes higher than it is 20.
Right. So you're looking at 20%. I just sold the business, and I'm looking at paying $200,000 in tax for selling that business. So what I've got to do is I have to find a way to make that money work for me in a way that Uncle Sam goes, oh, okay, I see you're not actually taking that money. You're using it to put back into the economy. So if you think about this, a lot of these tricks and tips are really, it's to encourage you to put your money back to work to fuel the economy. That's what they want you to do. So there's no reason you should ever feel bad about using these tax techniques, I should say. It's not just right and legal, it's good, because you're helping the economy to grow, particularly in like a QOZ opportunity, qualified opportunity zones. You're going to be looking at, making a substantial amount of gain, but taking a substantial amount of risk to help an area of the country grow that will increase the overall taxes for the country. And that's why Uncle Sam's okay with you paying less tax on the money you just got. So you benefit by making more money. You benefit by paying less taxes. These are all things you should really look into. And, Jay is one amongst many of the professionals that we work with that can be used together to structure your taxes and your retirement plans and your financial planning and your trust for your kids. You need a team, guys. You really, really need a team to make this stuff work right. Jay, your thoughts?
Very true. You're very right. It is just like anything else. If you don't pay attention to it, it doesn't get done. And
so I want you to do me a favor. I know that you keep statistics on everything. So what is your average dentist? Your average dentist is coming in and they're making, what's the average income today? I know that that's actually going to be kind of skewed because people who seek you out are generally higher earners, but the Occupational Outlook handbook or website on the government lists the average dentist income as $162,000 this year, which is of course 2 or 3 years old data, which I know it's much more than that. But what is your average dentist making, and how much too much taxes are they paying? So what's your average dental client's income, gross income, and how much are they paying too much in taxes?
Dentists owning a practice, one doctor, about 4 or 5 employees, in most parts of the country these days, to be in kind of the middle range, they are collecting between $900,000 to $1.2-1.3 million.
Right.
That is the collection part. Netting, if they're running the practice well, many of them are running the practice well if they have grown it to this level, about $400,000 or slightly above that. You know, Doc, you remember this time when everybody used to say that 50% should be overhead, right?
Right.
Yeah, those days are long.
Yeah, that was when people were taking impressions for crowns with amalgam, folks.
Yeah,
that's not true anymore.
Those days are long gone. With this era of PPOs in which we live, that number has gone up. Now the overhead has gone up to about 60%. 60% is considered good now. So if you take 40% of that, so about that, and plus some fringe benefits which they get as an owner of.
Right. Pass-throughs and things like that.
Yeah. The more they think about it and they work on it, the more fringe benefits they get, and they don't pay tax on that.
Absolutely. If you have a cell phone that you take calls from patients on, sounds like a business expense to me.
Yes, it is.
There's a lot of things. It's interesting as I was auditing my taxes this past year. And Jay, you know me, I pay a lot of attention to this. I found a lot of things that I hadn't been thinking about. Like I've got this iPad that I pretty much exclusively use whenever I travel out to conventions, right? And it's got internet on it. It's got a SIM card because I needed internet everywhere I was. Well, I'm only traveling to conventions because of business. That is a solid business write-off. There's not even any question about it. But I was paying for it out of pocket. So I had to switch that account earlier this year because I realized paying too much. I do these podcasts, right? And I read a lot of books because I want to be able to know more so I can do a great interview. Well, all of those books are business expenses. That's under R&D. I'm learning something new. Guys, you really, really need to get involved with someone whose best interests are aligned with yours. Not a tax preparer, tax planner. These guys will help your future. Remember, everyone dreams of paying less taxes, but a dream doesn't become a goal until you've got steps that you can execute to get there. That's what Jay does for you.
Certainly.
What are some common things that people are missing, Jay? Some common casual items that they're not thinking of, like signage on vehicles or vehicles that are mainly used for certain things, or tonnage of vehicles, and give us some interest, some normal ones. I mean, not even advanced stuff.
Okay. Yeah, sure. You see, the key thing here is which I just want to emphasize, is implementing, actually doing it. Knowledge by itself doesn't do anything. Sitting in, listening to this podcast or sitting in a course. I was at Greater New York dental meeting like a couple of weeks this Thanksgiving, and I had a 3-hour course. So at the end of that, I told them that you guys have totally wasted your 3 hours. Most of you have. So doctors are all surprised. How? I said, well, because I know most of you are not going to do anything about it. Not going to use the information. Okay. So interestingly, all these things you and I are talking about, there's no secret these days. We live in an age of knowledge. All this is
Right.
available on the internet. All this information is available. The key is actually implementing it, or having the systems available where you don't have to think about it, it automatically is implemented. So that is the key. That is the biggest thing. I run into the doctor sometimes. Oh, Jay, I had heard you speak at this place 3 years ago. I say, okay, wonderful. So what did you use the audit? Well, I didn't get to do anything, but I do plan to do it.
Right.
You audit lost 3 years.
Eventually.
So that is it. Even if you don't know a lot and you start implementing small things, and every year you implement one, within a few years you would have used most of these things. So that implementation is the key.
It's hilarious. And guys, to give you an idea of just how much money you may be leaving on the table, my wife and I both have successful practices. I don't practice myself anymore, but I still have one practice I own in partnership with MB2. And I've got several other business things going on, right? And so this past year, I fired my CPA because I looked at my taxes and I got a couple of people to look at them for me, second opinions, right? And I said, I'm paying too much. I know I'm paying too much. It just doesn't feel like I'm getting all the write-offs and stuff I should be getting. I had overpaid for the last 3 years, $350,000 each year or thereabouts. Because that's $1 million net loss. So if you are a high earner, if you're a practice owner in particular, there are things that you don't even know because you're not taught in dental how to run a business. There are things you haven't set up correctly. Ways to nest your corporations to minimize liability and protect your assets and shelter you from taxes. And they're easy, and it's just stupid easy. But we spend so much time worrying about that crown prep. We don't spend the time to research this stuff. You need someone who does. You need someone who cares about that aspect of your life more than you do, actually. Because I'll be very honest with you. To Jay, all this shit's a game. He likes to save you the most possible money. Us, we just want to work. We want to go home. We want to enjoy our family life and our kids. Maybe not get an emergency call from that crown prep saying, my tooth didn't hurt until you touched it, doctor. And that's like our ideal scene. That's where we live. That's where we think we're going to be happy. But, having more money never made anybody unhappy.
Very true.
So Jay, I'm going to let you close this off, and I want you to answer a question. I'm going to tell you, I think I already know the answer. The answer is called Jay, but kind of like Better Call Saul, you better call Jay. If a dentist wants to pay the minimum possible taxes here in Texas, what is the first step that they should take?
The first step they should take is send their tax return to somebody who does this dentist tax returns for a living. I'm not saying only me. There are a lot of people in the country who do this. I'm one of them. And get a second opinion. Many of us give this second opinion for free, but there are some who will charge you. Even paying to get that done will pay you back in many times if you do it. But you have to do it. That's the thing. Send your tax done in, get a second opinion, see. And that's the very first step to start the process of paying less tax. And if you send it to me, by the way, I will do it for free, as I said.
Do it now for last year, because you've only got 3 years to fix what you overpaid. And I'm going to tell you right now, he just said 95% of you overpay. You look over those past 3 years, Jay, you know what I think you should start doing?
Yes.
Before you give this information, I'm going to tell you what I think you should start doing. I think you should start sending people a check. Whenever they get you to do your free tax assessment, you should write them a check, like not a real check, a fake check that gives them a number, and it tells them exactly how much money they missed out and overpaid. And it says at the bottom of it, make a checklist, and it says, in order to make this check legal tender, check off the following boxes, and then it's a to-do list. Contact Jay, get him to do your taxes, do this, file that, write this off. Bring me these receipts. I think maybe you'll get some higher patient compliance there.
Yes, very true.
So Jay, how can they contact you and maybe get that golden ticket, that magical check that tells them how much they overpaid in taxes?
Sure. Well, it's very simple. My email address is very easy. It's Jay at my full name, JayMalik.com. JayMalik.com. You can just send an email.
Contact Jay.
Yeah, and
he's going to give you a portal.
Yeah, sure. And we get your text.
You want to talk about the process a little bit, about the portal so it protects their identity and all that kind of stuff?
If your tax return is password protected, you can just simply email it to us. Once we get it here, we will contact you to get the password over the phone. Or you can call us here with the phone number 305-563-6000. 305-563-6000. And somebody from here will contact you back and get your tax done from you. And once we have the tax return, we'll schedule the first meeting for about an hour, in which I'll ask you questions, try to understand the story behind the numbers. And then I'll go back to my work and schedule a second meeting with you, in which I'm going to show you what I found. It's an exciting thing.
Fantastic.
Yeah.
Well, guys, Jay, first of all, thank you for joining us today. And thank you, as always, for your knowledge and your wisdom in this area. You help a lot of people to pay a lot less taxes. And by people, I mean dentists. Guys, thank you for giving the Dear Doc podcast a listen. If this is your first time, don't forget to like and subscribe. Heck, for the 99% of you that have not liked and subscribed, remember to like and subscribe. Maybe hit that bell on the way out so that you don't miss amazing interviews like this one and amazing tax tips like Jay just gave you today. Everybody, because you're probably in that 95%, email Jay. See if he can save you some money. It only takes an hour or so of your time and could get you millions back, frankly. Thanks again. We'll see you on the next episode.